Okay, welcome everybody. So I'll call the meeting to order. The first issue on the agenda is discussion and action on the minutes for the February 4th, 2022 and June 6th, 2022 meeting minutes. Are there any changes? Did everyone get a chance to review them? I noticed, Brian, I did not see the June 6th, 2022 meeting minutes. The attachment was just the agenda.
I think they were both just the agenda.
Why don't we hold that till next time? Sorry about that.
So we'll hold that. Next is further discussion of the proposed FY23 MBTA Advisory Board internal budget.
All right.
So
let me share my screen.
Take this away.
So Kirsty, why don't we, can everybody just introduce themselves so Kirsty knows who we are?
Sure. I'll start. Todd Curran, I'm the Train Station Administrator for the town of Brookline. I serve as the treasurer for the advisory board and chair of this committee.
I'm Frank Tremontosi, and I work for Mayor Koch in the city of Quincy.
Lynn?
Leonard Diggins, and I'm representing Arlington. I'm on the select board chair this year.
And Renee?
Renee Davis. I'm with Powers and Sullivan, and I'm working on the independent audit.
Okay, Brian.
I'm going to say hi to everyone because we, Jim Powers in my company actually is works on does Quincy's audit. I work on Arlington's audit. Craig, I think, works on Brookline's audit. So we have like other relationships here. But yeah, happy to be here. We're just helping the board get caught up on some of the past audits that have lagged a little bit.
So, so Kirsty, just so you're aware, when I became executive director in 2020, I was acting at the time, we found out that an audit hadn't been done since 2012. So we did the fiscal 20 audit. We got Powers and Sullivan on board, and now at the request of this committee, Powers and Sullivan is going back and doing all of the back ones, just to make sure that we're up to, that we're current. And I certainly think it's a wonderful thing. So not that we're afraid there's any non-feasance or malfeasance. It's just, you know, good practice. So Renee, we can, while we have you, so I want to run through the proposed fiscal 23 internal budget. And I was hoping that we could get a vote of the committee today to recommend it to the full board for our meeting next week. Also just interested to hear from you, Renee, if it's all right with you, Todd, about how the audits are going, what if you're seeing anything, kind of what your timeline is. And then, you know, I'm sure there's a couple questions on this specific document, but we just sort of wanted to get an update from you.
Sure. Yes. Yeah. So as Brian had mentioned, prior to Brian coming, they a different firm had audited 2009 through 2012. And it looked like there was a big lag before that happened because their reports weren't issued until September of 2020. So they did sort of one report from 2009 through 2012, issued it in 2020. When we got the call to come in, it wasn't really clear at first whether or not those back years would need to be done. So we jumped in and did an audit for fiscal years 2019 and 20. We issued that report last June, so June of 21. After that, we were asked to kind of go through and pick up the years in between. So this is not the norm, right? So now we're going back and we're doing an audit. I'm going to say audits, separate audits, but we're going to give you one report that's going to be 2013 through 2018. And that's what we're in the process of working on now. Then you can be prepared to get on a regular schedule. And once regular schedule, at this point, we could already do 21 and almost be ready to do 22. So that will be the next thing. We're almost done with the back years. I will say it's a pretty easy process, right? What you have going on, cash has always been reconciled. So we had no problem. Like we went and picked up the boxes and the binders that had all of the support for the tax filings, the payroll tax filings, the 941s, the quarterly reports, all the bank statements, the bank reconciliations. I don't think there was ever really an issue with the bank statements being reconciled timely. The only things that we have found found throughout is that we gave you a management letter last year. So this is some of the stuff that we mentioned in that. There are some account balances that really just weren't being monitored well. So, and this is not new. This is from when this is from the 2012 audit, going forward. There were some old adjustments that were made in QuickBooks back in 2006, right? So I can go into QuickBooks, I can see the entries being made way back in 2006, audit adjustment, or things that just weren't supported. What we've done is worked with Amira and Deborah to just go clean up those balances, right? So there's one of them, the big one, for example, was $61,530. It was 3 entries that made up, you were carrying a negative accounts receivable on your books, not supported. It was just kind of junk. It wasn't, that's the 61,530.08 that you see in front of you. Our recommendation was you have no support. You don't know what it is. It's not a good balance. Shouldn't be impacting cash or your budget. Let's get rid of it. So they did. They went in and cleaned up QuickBooks. So going forward, you should really only have your true balances. And for the advisory board, you have cash, right? You have cash. You might have some accounts payable. There's some cutoff, there's always some sort of accrual or cutoff for accounts payable. You don't have any significant capital assets. They had some equipment that was, by your last audit, the net value was under $500. It was, almost fully depreciated. There was no real need to keep that unless you're going to buy some big significant assets, which to the best of my knowledge, you weren't planning on doing. So no big assets, no other big long-term liabilities or even short-term other than accounts payable. So that's your balance sheet. It's cash. It's cash, a little bit of payables and some fund balance. That's easy. From an audit perspective, right, we need to verify that the bank balances are accurate, that there's no big differences that can't be justified, that there's just some like uncashed checks and so forth. From an audit perspective, then we get to your income statement, right? The P&L, you get 12 months worth of interest on your bank accounts. That may be good news, if there's any, is that may be going up a little bit now. And the big thing, the big ticket item is your payments, your quarterly payments that you get from the T. And so from an audit perspective, that's the easiest audit I could ever do. I download the cherry sheet from the state. I look at the MBTA assessments that went to all the member units. I multiply it by 0.0025, divide that by 4, and those should be the payments that are coming into you. Easy audit. So for what we're doing now, for the audit we're doing now, 2013 to the penny, no problem. 2018 to the penny, no problem. There were some in those years between 14 and 17 years that it looks like they changed. They weren't just but I can get to every quarterly payment, but it looks like they changed the way that they were doing it. So they split. I'm just going to actually pull it up on my computer so I can be a little bit more articulate about that. So they split the way that they were doing it. So 13 was fine, exactly matched to the cherry sheet. In 14, you only got 2 of the 14 payments, and then they jumped right into 15. So it's a couple thousand. It's not material to your financial statements, but in essence, if you should have stuck to the old system, you got a couple $1,000s too much. By the time we got to 2016, it looks like they didn't adjust the payments for the next year's cherry sheet, and you got the same exact amount for 8 periods, which would kind of went in the other direction. Overall, between 2013, 2018, this period that we're auditing right now, you were, I'm going to say overpaid. I don't know if that's the right term, but if I'm doing that quick calculation with what you should have gotten from revenue from the T, it's over by about $8,000. So it goes over a little bit each year just because of the way the payments, it looks like they kind of didn't adjust it and tried to make a correction of that. But financial reporting, your financial statements, and my job to report on them, I'm done with that. I can give you my analysis of it. It's a little bit over. I don't know that you would need to go back and do anything about that. It's certainly not material to the T. It's certainly not material to you overall in your financial statements. So So revenue, I'm done testing revenue. Cash, we're good with cash. And then when we get to your expenses, as you know, we were kind of briefly talking about this, the big, because you are a service entity, your goal here is to have Brian doing his thing. You have good budgetary controls. We see that, right? You're going through next year's budget, you're analyzing the budget. Your biggest expense should be and is payroll related, because you need your advocacy, you need your guy out there, doing what he's supposed to do for the advisory board. So we expect, and what we see is most of your expenses are payroll related. Again, we can tie the amounts here to what was on the W-2s, what was on the 941s. We spent a fair amount of time this year that I probably would have been spending doing the audit, but we did a lot of consulting. I was hoping Amira was going to be here today, but Brian knows this. So there were some changes that went on, I'm going to say within QuickBooks or within payroll. You switched over from QuickBooks payroll to Paychex payroll. I think it's a good move. I think it's a good switch. But the girls had a little bit of issue with being able to get the information into QuickBooks. They were used to a certain system. The system changed. Suddenly reconciling cash wasn't as easy as it had been before, because change, just they were used to doing it a certain way. So we spent a fair amount of time helping them reconcile, helping them set up the accounts that they needed so that QuickBooks in your ledger would properly reflect what actually happened through Paychex, right? So now Paychex is doing all the payroll and they need to get the information into QuickBooks. I think that that's fine. We have no problem. We've had no problem with the numbers so far as what's recorded in any of the expenditure accounts. We're still in the process of doing a little bit of testing. Once we get rid of payroll and we're done with that, the other expenditures are really pretty small. It's not a big part of your budget. Health insurance is pretty easy. We're checking to make sure it's reasonable, that you have the 12 months are being paid in any one fiscal year, that there's no kind of lag in paying those bills. As far as risk goes, we talked about this with the 19 and 20 audits. Your biggest risk is, because it's such a small organization, you want to make sure that there's oversight, right? So Brian should not be, approving his own reimbursements or his own expense reports. You need to make sure that Todd, as the treasurer or somebody else, has some kind of oversight. That's where something could go wrong. Brian has said you want QuickBooks to be online so that someone not only can, but actually goes in and looks at it to make sure, look at the bank statements, look at the checks that are being cleared or the wires that are going out, to make sure that a person with access to your funds doesn't do something that is not reflected in the ledgers. We haven't seen any evidence of anything like that happening. That's the only thing we have to consider as far as risk. Obviously we look to see what you're paying for legal bills. So far as we know, we don't see any big issues, that you're not being sued for anything. There's no unrecorded liability in your financial statements. But while we're here, I have to tell you, I've said it before, if there is, it's your responsibility to tell us, right? I'm not, I'll read your minutes and look at your meetings. And of course, I'm auditing 13 through 18. So we would think that if there was some big issue, it would have come to fruition by now. But if there's anything, you have a responsibility for your financial statements. You need to tell us about that so we can properly disclose it and or record a liability. But we don't see any of that. It's small. We just want to make sure that you have compensating controls because it's such a small organization. In the schedule that Brian has up, we made several, I'm going to say, those corrections of old balances that were sitting in QuickBooks that just weren't supported, negative accounts receivable, some liability accounts that just weren't justified, getting rid of some old assets that were either fully depreciated or they didn't even know what they were anymore, but they were old, like we're talking 2006 balances that just shouldn't be there. And it keeps the books nice and clean. So we're almost done with the work that we're doing. We have a little bit more testing of your expenditure accounts to do, and then just putting together the final report for you. We've tied into the prior audit balances, which was 2012. So I know what accounts they had adjusted. We didn't really have any issue doing that. I think the 13 through 18, we shouldn't have a problem getting you the reports by the end of July. And then it's just a matter of the next one is getting 21 done. And 21, I've been pretty involved with looking at their reconciliations and actually helping them with the reconciliations. So I don't expect, this is kind of taking up, getting rid of the old, the old little issues that were out there. I don't expect any surprises for going through 21 or 22. So, I mean, that's sort of our game plan going forward. Do you have questions for me?
Yeah, Renee, thank you very much. Just for Sean's benefit, who logged in right after you started, we've jumped to D, update on the old audits that are underway. And Brian, can you just note for the minutes that Stephen Olenoff had joined us, but then logged off about 5 minutes later. So at this time, if any of the members have any questions for Renee, just feel free to unmute yourself and ask away.
So Renee, just, I guess the big question would be, you mentioned, you talked about the 61,530 here on the revenue side. Any sense of what this 21,000 number was? It's, so I ran a P&L for fiscal 22 and it showed up in the revenue. I get the sense that it's another one of the adjustments that you were talking about.
So that wasn't an adjustment that we gave them. So I have my adjustments here. I do not have a $21,000 adjustment. So that was, where are you getting that? That wasn't in the, was that just coming from QuickBooks?
Yes. Yeah.
So
just
I
to
don't know off the
update,
top of my head. I can actually open your QuickBooks and take a look at it, but I don't,
We
it's
can
not
dig
an
it.
audit adjustment that came from us.
okay. Well, I mean, it's, the good news is it's revenue. The bad news is we don't know where it came from.
Yeah, but that, I mean, that doesn't need to be a mystery, right? That should be pretty easy to find.
It should be.
So again, I can, give me a few minutes. I can take a look, or I can get back to you. I guess my next question is, I don't know how often you all meet, but if we have the reports done, I'm going to say in July, would you like me to come back? I mean, it might be nice for me to come back in front of the board quickly, just with the Excel, with the financial statements, so we can take a look at the revenue and expenditures for those old years so that you can see what it looks like.
I certainly would like that if the committee agrees.
Yeah, from my perspective, I think that'd be a good idea before taking it to the full advisory. If this committee was able to see that, ask our questions, review the data. Maybe, if you have it by the end of July, maybe an August meeting or an early September meeting.
That would work for me. I mean, I think that's a good idea, because then you can kind of see it you can see the reports laid out. There's not going to be no surprises. There's nothing big there. If you've looked at 19 and 20, they're going to look very similar. The revenue obviously goes up as the assessments go up. As I mentioned, that's a pretty easy audit from our standpoint. There's not a lot of risk. And we focus a little bit on the timing just to make sure that there's no expenditure. So we're testing right now we have QuickBooks. We test those expenditures that went in the next period to just make sure that there's no timing issues. Those are really the only things we're working on.
Okay, and Renee, I just wanted to just update you and the entire committee just on procedures. So we finally got the QuickBooks Online working as of this month. We had to buy a few additional licenses, but that's okay. And as of now, Colette has read-only access. And the idea is to give everybody read-only access. I was just going to wait until the next fiscal year to do that, which is next week. But we are finally getting to that point where people have full access to all of our books. So
I think that that's great. And, just again, to make sure there's little risk. You're looking at your budget to actual, right? So you see that if something were strange, right, you're going to ask questions about an extra $21,000 in revenue, or if it went the other way. So, but just to make sure someone's paying attention to those bank statements, bank reconciliations, and to make sure nothing's happening in the ledger. QuickBooks is great, but there's not strong internal controls. I think it's good for what you need it for, but having access gives you improved controls, just because the people that are using QuickBooks never know when someone's going to come in and at least take a look at it.
Yep.
And I mean, they've been very open with us. They've given us access to look at anything we need to. So we've had no issues as auditors. But that's what you want to set up, just to make sure nothing could ever go wrong. So I think that's great. And then if I get you drafts by the end of July, we can plan on meeting again in August or September. Either one's fine with me.
That'd be great. And if there's any other recommendations you have in terms of improving transparency, happy to do it. I should also note that I've been very fortunate that Dennis O'Brien, who's our IT consultant, is also the IT consultant and the finance person for Pan Am Railways. He's been helping me with this quite a bit as well, inputting things and cleaning it up and getting access to everything. So we have a very good audit trail. I'm not concerned about that. I think we have a redundant audit trail, which is really good. But if there are any recommendations or anything anybody wants to see changed or updated or look at, as far as I'm concerned, this is an open book, and there's nothing to hide. It's really pretty straightforward, but
it is. It can be a really simple process. You should be focusing on doing the work, and the numbers part of it, or your financial part of it, should be pretty automatic. And at this point, you're getting there.
I'm losing you, Brian. This is just me.
you're losing.
Yeah, Len, I think it's just you. I hear Brian pretty without an issue.
I'm sorry, Len, I'll yell.
Any other questions for me?
Seeing none, thank you very much.
I think it's just me. I think it's just me. No, I think it's just me because.
Okay,
Okay.
Brian, why don't we jump into the proposed budget?
Okay, I'm gonna log off. If you have any questions for me, or if you want to just let me know when, I'll get you drafts and then you can schedule the next meeting.
Thank you, Renee.
All right,
Thank you.
guys, thank you.
Great. So thanks, Renee. Really appreciate you. And hey, Colette and Amira. I should note, Renee has been spending an inordinate amount of time working with Amira and Deborah and the team on reconciling things and really walking us through. And it's above and beyond. And we're very appreciative, Renee. So
All right.
really, thank you.
Thank you.
I
I'm gonna leave the meeting as soon as I can figure out how to.
can't tell you how much I love QuickBooks. So having your help has been great. Okay, so the fiscal 23 budget, which you can see in front of you, I hope. We're projecting revenue of 460,000, most of which, as you can see, is from what we get from the T, which is 0.25% of assessments. Assessments in the fiscal 23 budget, as you can see there, is 183,765,503. So 0.25% of that is the 459,414. In terms of what we thought we get from interest, I very much lowballed that this year, as you can see. Highballed it last year, thinking it would be significantly more than it is. And we clearly didn't make that budget number by almost $15,000. So putting it in for just 1,000 this year. And as you can see from the actuals, we're at just over $1,050. So I think 1,000 is reasonable. We'll probably come in over that. I would rather be over for revenue than not. So that's the revenue. In terms of expenses, I'm going to save consultants for last. Almost everything else is more or less what it is or what it what the actuals are for 22. And these numbers are accurate as of yesterday. We do have one more payroll, and we will pay one more set of bills. So these numbers over here will change when we do our final balance, but basically we're using those. So the big things that are going to change in 23, as this committee knows, Kirsta, you might not be aware of this. So our lease expires at 177 Tremont at the end of November, and we're not going to renew it. We have about, I'll say 2,000 square feet for 3 employees. It's just a lot, and it's a little more than I think we need. So this committee has been talking about trying to get space in 10 Park Plaza, which I've been working on. I have a guy there that I have to talk to next week, Glenn, I forget his last name. So that's the ideal situation, is moving over there into a small office. I've also been in talks with the Massport CAC's new executive director, Aaron Tolfer, about maybe sharing some space with them, trying to share some resources. So we'll see how that pans out. But the way I look at it, we're spending $8,000 a month now on rent, and wherever we go, it'll be less than that. So that will accrue, to the bottom line as a savings. And I will miss 177 Tremont. It's been a good place. It's on Boston Common, but the windows don't open. Nothing's really been updated since I was first worked there in 2008. I think it's just time to find a new home. So that affects some of this stuff. For instance, we lease our copy machine. There's some other capital equipment in there that we lease, a postage machine, things we really won't need. We're not going to need a postage machine in the future, I don't think. Copy machine we'll probably just use a third party for those times when we have to produce something. We used to send out a lot of mailings, physical mailings, a lot of letters, a lot of printing. Now most of it's been put on electronic, so those costs should come down. With respect to health and dental, I want to note that I just learned from Deborah Gall that she's going to come off of the advisory board's insurance plan and go on her husband's plan. Deborah got married in the past year, and we're very happy for her. Mr. West is a wonderful guy, retired bus inspector. So that's going to produce a significant saving. She estimated to be about $14,000, which is roughly half of what we're spending right now. Everything else is more or less the same. You can see here that we really didn't spend the legal and audit numbers that we thought we would. I think most of that is because Powers and Sullivan hasn't billed us yet for what they're doing. So that, that will carry over. So we definitely will spend this plus a little bit more in 23. This number you see here, we were planning to purchase T passes for the 3 employees last year. I was able to get the T to give us public and public official IDs instead, which allow access to the system. So that expense was never really needed. Everything else is more or less similar. The big thing here is payroll, and I'll talk about that in a second. You might have noticed under, where is it? Subscriptions is a big number, bigger than we thought it would be. That's the State House News Service that we purchased a subscription for. It's expensive. It's like $4,000 a month, but I found it really important and really helpful to getting our work done. We've been quoted in it quite a bit, so it really helps. This number, telecommunications, will go down. We have a very expensive phone system in the office right now that we won't have to pay for once we move. We're talking about what we'll do in the future. We might move to some kind of we'll move to another system for sure, maybe cell phones or whatever. And then the same with utilities. Our utility bills will drop, obviously, if we're not there. So let me talk about payroll and consultants. So this is our payroll for 23. As you can see, that my number, the 141 is sort of what my contract is, the average of the 2 years. My contract renews in March. So I'm sorry, it's not the average. It's like 2/3, 1/3. Amira is the transportation planner. Deborah West, excuse me, is the office manager. And then we have a summer part-time high school student helping us shred and recycle the tons and tons of paper that are in the office that we need to get rid of before we can move. So that is your payroll number. That's our biggest number, as Renee talked about. And then in terms of consultants, which I will go back up now, that's the biggest number. The 150, that's the 159 here. So we talked last time about getting some strategic help, and that's the 120K that you see there. Let me get to that last. So the accounting is really just the license fee for the QuickBooks licenses. We will, as I said, give everyone read-only access starting July 1. Our IT consultant, Dennis, is not going to go up in cost. He, as I've mentioned, is a IT consultant, freelance. He does 2 towns in New Hampshire, Pan Am Railways, and us. So he has very unique transportation and municipal experience, and he's been incredibly helpful in the last 2 years. And then the strategic help is 120K. So that's 10,000 a month, and that's a big number. And we're suggesting we go with the Dewey Square group. Dewey Square is obviously a well-respected, well-known entity. They are supporting Maura Healey and have a ton of Maura Healey people, former Maura Healey people and current on staff. And the idea here is that as we get a new governor, a new legislature, at least 4 new members of the MBTA Board of Directors, there's going to be a lot of change happening in Massachusetts in the political economy. And in order to get involved in that, we need some help. For instance, folks might remember we filed legislation in January of 2019 to put the advisory board's employees onto the state pension plan and the GIC. I have enough juice to get that through committee with favorable, ought to pass recommendations. I've actually gotten it through 2 committees, Ways and Means and Public Service, but I just don't have the juice to get it over the finish line and get it put into a bill or amended into a bill or approved. So that's the kind of help that we need in terms of getting legislation passed. Assessments are going to be opened up again in the near future for the first time since 2009 at least, as the South Coast Rail communities come on board. Always a dangerous time, when folks talk about not paying any assessments, which I'm sure every city and town would like, but it's certainly an area where we're going to need some assistance on Beacon Hill. And the other reason Dewey Square is very appealing is that they have really good links into the media, into the business community, and they're going to be able to get our message in front of those areas, which is places where we really haven't been heard well. I can get in the Boston Globe, I can get on TV pretty easily, but I'm not in those sort of real decision-making rooms where I think if we want the reputation of the advisory board to grow, it's just where we sort of need to be. So I should also note that I've got 2 bids, one from Dewey Square, one from O'Neill, basically to do the same thing. And the 10K cost is pretty consistent. I should also note that the Massport CAC is doing the same thing right now. They're actually going through a full-blown RFP process through Massport. We don't have that relationship with the T. We don't do those full-blown RFPs. But I feel comfortable with this number. I think it's good. And we've actually negotiated it down quite a bit from what they initially came in at. So I should also note that the budget, as you can see, is not balanced. Expenses are greater than revenue by $123,000. This is all kind of part of the plan. If folks remember that we put in place last year, we sort of agreed to do some deficit spending for a couple of years. We have $750,000 in reserves. So we have the money to spend. It's just really a question of the strategy. If you back out Deborah's salary and back out the rent, we're actually really close to being in the black. So we have a plan to get balanced. We're just not there yet, but I'm comfortable with this. And I think if you look at what our actual spending was for 22, you can see that we're going to be right around that, right? Maybe a little bit in deficit, but not materially. So with that, this is what we're recommending, what I'm recommending the committee approve and bring forward to the full board at our meeting next week. But I'm more than happy to answer any questions you have.
Thank you, Brian, for all your hard work on this. So I have a couple questions, and then I will turn it over to the members. I did email Brian some of these questions in advance to give him a heads up. With respect to the, last year we decided to do deficit spending again to invest and rebuild, but also to, go back and redo all the audits, ensure that we, had open, clean, transparent books. This year, it seems a large part of the deficit spending is the Dewey Square contract as well as payroll. So I have a couple questions. The Dewey Square contract proposal that you sent out had $15K a month. Your email had $10K a month. Can we just get clarification on which one it is, and if there are any changes in the level of service they're giving us based on that?
No, we negotiated them down to 10 with no change in scope. I should note that Mayor Koch was very helpful in doing that. He's a very good negotiator. So, and I should also know that he fully endorses this approach. So yes, I should have noted that, Todd. Good question.
No problem. Another question I had was, when I read over the proposal, it was very broad, very open. There's nothing that I saw that were specific deliverables that they had to deliver on a monthly basis or by the end of the contract. There was no idea of the work that they'd be doing on a daily or weekly basis or monthly basis to justify to give us an idea of what the 10K would be paying for specifically. Is it possible, if you know that, to provide that information to us? If not, to get it to us as well as the full board before we meet to approve this budget. I just think it's going to be a better idea to inform the members on exactly what we're getting for our money.
Of course. Yeah, I've requested that, and we're just waiting to hear back from them.
Great. The other question I had was on these contracts that, again, we all put out for consulting services in our day job. Typically, they list the principals, but then they'll list who your project manager is, who will actually be doing the work on a daily basis on behalf of the advisory. And this listed the principals, but didn't list necessarily identify who's going to be working specifically on our project. So if we can get that idea as well, the principals are obviously very impressive. We all know their names, we all know their work, but it'd be good to know who you'll be dealing with on a daily basis or weekly basis as well.
Absolutely. I requested that as well for you, Todd.
Thank you. The last question that I have, and it is probably the toughest question anybody wants to ask, and I'll ask it, that's why they pay me the big bucks, is that when you look at payroll, I know that we have talked, at least for as long as I've been representing Brookline, is that we would see a reduction in the payroll as retirements or attrition happen. That's not being realized again this year. Is there, since we have worked over the past year to automate a lot of the office manager position, and I'm not so certain that there is a need for a full-time office manager position at this point in time of the advisory board. Is there thought to move that position to a part-time position? And are there contractual obligations that will not allow us to consider or do that? To again try to reduce that deficit spending. I understand we have 750,000 in reserves roughly, but at this rate we will be chipping away relatively fast at that amount. And I'd like to slow down how fast we're chipping away at it.
Me too. So the answer is yes, we do not need a full-time office manager. With that said, I guess I would say Deborah's been with the organization for over 20 years. She is talking about retiring. She continues to talk about retiring. She's had some health issues recently. She just did a spell at Spalding. So, you know, I did want to give her the dignity. And I feel like we should give her the runway to retire on her terms. She's in her 70s right now, I think. So, you know, my recommendation is that we continue to show her the respect and let her go out on her terms. But, you know, the plan is not to backfill that position once it goes. And, you know, as I suggested, I think we will get through the deficit spending next year, and we'll be balanced by this time. Then.
Okay,
Hope I answered your question.
Yeah, you did on that one. Yep.
And I do.
Data.
There is. I've already been talking to Renee and Dennis O'Brien about how we can outsource some of that if we have to. We're gonna continue to automate in terms of bill paying. We were talking a little bit before the meeting started. You know, my goal is to get to a point where I never sign a check again. Just have it all automated with the proper audit trail. So that is the long-term goal, and we will get there.
Nope, sounds good. I'm confident we will. Len, you have your hand raised if you want to unmute and take it away. And in the meantime, anyone else that wants to ask questions, if you can just raise your hand so we can go in an orderly.
Thanks. And you may be.
Can't hear you.
Sure. And I hope that you all can hear me well, because I'm the one with the unstable internet connection. If it gets to be a problem, just let me know and I'll stop talking. So this is along the lines of the strategic plan. Todd asked a lot of good questions. I guess my two things is that I feel that we need to have a strategic plan for them to execute on, or at least help us work on that. And I'm wondering, when would they start? Would they start in July or would they start later? And also, I would like to bring the executive committee in on this, to have a discussion about it. So maybe, we put it in the budget, have the board, the full committee sign off, and the full board sign off on it, but maybe wait before we execute on it to make sure that we execute on it in a prudent way. That's all. I have strong feelings about this, but not very strong feelings about it. So I think this is all I'm going to say about it. I don't think I'm going to raise this up in the full committee, full board meeting. Thank you.
That's a good idea, Len, and we'll schedule that, and we'll get them to come and present and answer their questions and your questions as well. Good idea.
Thank you, Len. Colette?
So thank you, Todd and Len. Those were great questions and covered some things I was interested in. I sent Brian some detailed notes that I thought it might be helpful to put into the sort of notes column of this spreadsheet before we send it to the advisory board in full, just because it will sort of capture this discussion and basically answers people's questions before they have questions. But a couple of things I wanted to touch on. I didn't see in this budget some provision for kind of bookkeeping or sort of accounting support, which I think might be helpful. And I'm sorry I missed the beginning when Renee was here, but I do think that we probably need to outsource the bookkeeping a little bit. So especially if we're going to be able to bring the office manager position to part-time, we should invest in a little bookkeeping support. And then I know we're sort of pursuing a couple of options on office space, but I do think it's important to have some office space, and we don't really have a budget for it here, which is fine because we're hoping to have options that won't have a cost associated with them. But if that ends up not being the case, I would support having some funds for office space. And I think I had a small conversation with Brian yesterday about the fact that we have reserves And we also have a strategic plan for the advisory board itself. And so until we kind of make a little bit more progress with the strategic plan that the advisory board has, set in place for itself, I think it's fine for us to eat up some of our reserves to get established and do that. And then once we've done that, make a reserves policy, make an investment policy, so we could maybe invest some of our retained earnings in just a simple certificate of deposit. If it could be a 6 month or a 1 year period, those I think are valuable things for us to sort of have on our work plan for this year, from this committee's perspective. And, Len, I totally agree with your point that I don't think it's appropriate for us, the Audit and Finance Committee, to execute that contract with the consultant. I think it's for us to say we can fund it, but I think it's the advisory board's decision to say we should do it. And that's all I have.
Thank you, Colette. I completely agree. I guess I should note to this committee, the bylaw committee, which is meeting in 10 minutes, will take up an amendment which gives this committee much more authority to write financial policies and procedures. Right now, that was sort of understood, but it wasn't codified. So we have a lot of those in place. They're just not all combined. So at some point, this committee is going to have to, I'm going to ask it to meet and consider those and take action on those, which will really codify how we do things. And that would include an investment policy, which I agree we desperately need, because, it's money we are potentially leaving on the table.
Brian, can I just clarify?
Yeah.
So my understanding is through our bylaws, either the full board or the executive committee would have to execute that contract with Dewey Square. At this committee, we're reviewing it for the budget purposes, but we don't have the authority to execute that contract.
I'm not sure the bylaws are that clear, but I will take that as the directive. So we'll do nothing until the executive committee meets. I think it's a good idea to put it in the budget. But yeah, I like the idea of not executing it until the full board or the executive committee at least hears it.
So I think Colette and Len would probably agree with me. The bylaw committee might want to consider a revision to the bylaws to make that clear that the executive committee at a minimum or the full board is needed to execute contracts.
Okay.
I agree that we're not, while we're in the position to put in the budget, we shouldn't be making these decisions for the entire board as a whole.
Okay, good idea. I'll bring that up in
10 minutes.
10 minutes.
Sean, Frank, do you have any questions regarding the proposed budget?
No, I think at this point, obviously I missed a few meetings. I appreciate everyone's patience with me. Just, obviously I've been a little slow getting out of the gate here. So no, I think it's best for me to just kind of being the new guy, just kind of sit and absorb and see how things go. I think everything was very clear. I guess maybe one question, if you don't mind. So Brian, you mentioned Deborah. So I totally, as a municipal manager myself, totally appreciate your sentiments. Are you sort of expecting that this is a path that she's probably going to take in the next fiscal year? I mean, you said she's kind of been talking about it, or is this a possibility that we could be having the same conversation, a year from now? And I'm not pushing in a particular direction. I'm just curious.
It's definitely possible, Sean. I thought she would have retired in the last this current fiscal year, in the last 12 months. And I think not having us all in the office every day hasn't helped that. And as I was saying, we're gonna get back in 5 days a week starting in September.
Mm-hmm. Thank you. Thanks, Todd.
Brian, I know you're recording this meeting. Will you send me the link? I would really like to hear what Renee had to say. I'm sorry I missed that.
No problem.
Frank, do you have any questions about the proposed budget?
None for me. I'll make the motion to adjourn.
Do we need a vote to recommend first? Can I get a motion to recommend the budget?
I'd request that if possible.
I'll move the motion.
Frank moves a motion. Is there a second?
Second.
You got it, Sean.
John seconds.
I'll second it.
Everyone's seconding it. Okay. All those in favor, raise your hand or say aye.
Aye.
Aye. All those opposed? You have your recommendation, Brian, unanimous.
Thank you. So I just wanted to, before we adjourn, just talk a little bit about schedule for next year. I do think this committee needs to meet at least quarterly. And I would like to get that scheduled as far in advance as possible for everyone's schedule. But I don't know if there's better days or times or not. I would ask that it be kind of the month after the quarter ends so that we can have actuals for the previous quarter to look at. That's a lesson learned from the past year. We were kind of looking at actuals little before they were actual. So that would be helpful. And so just to, I do think we need to meet at least 4 times in the next 12 months, and then probably at least twice next June. So that's, 5 or 6, depending on how you count it. And then again, it's up to the committee if it wants to meet more often, we can certainly do that. We will have those financial policies to bring to you at some point, and we do have the kind of audits that Renee mentioned coming August, September timeframe. So we can figure that out. We can meet for more than an hour if we need to, or we can meet more frequently. I'm just throwing it out there that it's up to you folks. I should also note that Heather Hamilton from Brookline will be joining this committee, working with Todd next, once we elect them. And she'll be taking on the treasurer role officially, although Todd, I'm sure you'll be doing all the work still.
Hopefully not.
And Colette has very graciously agreed to co-chair this committee with Heather. So we're very grateful to you for doing that. Kim Hanton is going to take JD's position on this committee from Revere. She's the chief of staff to Mayor Arrigo, which I think is very helpful. So that's kind of the only changes that we see forthcoming here when new committees are elected. So we're getting better every time. And if we remember where we started, we're light years ahead, but there's still a long way to go. So I appreciate all your help, folks. Thank you.
Welcome.
Great, thank you. So now I'll take that motion. to
Happy
adjourn.
New Year.
Move to adjourn.
Can I get a second?
Frank, you have to do it.
He did. Can I get
I'll
a second?
Colette?
I'll second this one.
Colette seconds. So
No,
without
say Colette,
objection,
get a second.
without objection, we're adjourned. Thank you.
Thanks, everyone.
Thank you, everybody. Have a good weekend.
Thank you, everyone.
Into you.
So, bye.
Thank you, Brian.